Everyone is watching the wrong movie. Turn on the news right now, and what do you see? You see Black Hawks. You see a captured president in handcuffs. You see generals giving speeches about democracy and liberation. They are calling the capture of Nicolas Maduro a historic military victory. They are calling it a geopolitical reset. But if you look at the flow of money in the last 48 hours, if you look at what's happening on the dark pools of the bond market right now, you realize that none of this was a military operation. This was a foreclosure. What happened this weekend wasn't just a regime change. It was the closing ceremony of the largest hostile takeover in corporate history. While the media talks about human rights, Wall Street is quietly carving up a prize that has been locked in a vault for 20 years. We aren't talking about millions. We aren't talking about billions. We are talking about the key to the largest energy reserve on the planet. This is the story of the $300 billion deal that no one is talking about. And if you don't understand the mechanics of this deal, you are going to miss the biggest wealth transfer of the 2020s. Let's strip away the politics and look at the asset. Venezuela sits on 303 billion barrels of proven oil reserves. That is more than Saudi Arabia. That is more than the United States. For the last decade, that asset was effectively stranded, worthless because of sanctions, mismanagement, and corruption. On Saturday, January 3rd, the United States didn't just capture a dictator, they captured the title deed to those reserves. President Trump's statement was very specific. He didn't say, "We will hold elections immediately." He said, "We will run the country until a safe transition is possible." We. That is the key word. The market knows what this means. It means the United States is now the de facto CEO of Venezuela Inc. And like any distressed company under new management, the first order of business is capital expenditure. This is why you are seeing a panic buy in U.S. energy services this morning. But that's the amateur trade. The real money is moving somewhere else entirely. Here's where it gets strange. Most people think American oil companies were kicked out of Venezuela years ago. They think the U.S. has to re-enter the country. That is a lie. For the last 3 years, there has been a ghost license, General License 41, that allowed one specific American company to keep operating, keep drilling, and keep exporting, even while sanctions were crushing everyone else. They were the only ones allowed in the room. Why? Because the State Department knew this day was coming. They needed a caretaker. They needed someone to keep the lights on until the takeover was complete. That company isn't just well-positioned. They effectively wrote the playbook for what happens next. That company is Chevron. But here is the catch. Chevron can't do it alone. Venezuela's oil infrastructure is a rust bucket. We are talking about pipelines held together with duct tape, refineries that haven't seen a new part in 15 years, and ports that are silting up. To get those 303 billion barrels out of the ground, Venezuela needs an estimated $12 billion to $15 billion per year in pure infrastructure spending for the next decade. This is the $300 billion deal. It's not just the value of the oil, it's the value of the contract to fix the machine. This is a CapEx supercycle. We are looking at the biggest reconstruction project since the Marshall Plan. And who gets the contracts? It won't be the Chinese. It won't be the Russians. They backed the wrong horse. Their assets are likely going to be nullified. The contracts are going to Halliburton. They are going to Schlumberger. They are going to Baker Hughes. This is why I am calling this the Texas bailout. The money to rebuild Venezuela is going to flow directly from Caracas into the balance sheets of Houston-based service companies. If you are buying big oil, you are missing the point. You need to be buying the fixers, the companies that sell the picks and shovels for this gold rush. But wait, there is a second layer to this mystery. If Venezuela is broken and the U.S. is going to fix it, who pays for it? Venezuela has no cash. They have $150 billion in debt they haven't paid in 8 years. Normally, a country in this situation is bankrupt, game over. But in the last 72 hours, something bizarre happened in the bond market. The trading volume on defaulted Venezuelan bonds, which are essentially junk, exploded by 4,000%. Someone is buying the debt. Someone knows that the default is about to become a deposit. Here is the mechanism. Debt for equity. The new U.S.-backed administration cannot pay back the $150 billion in cash. They don't have it. But they do have oil fields. The deal that insiders are whispering about involves swapping those worthless bonds for equity stakes in the oil fields. If you hold the debt, you don't get cash. You get a piece of the flow. This is why hedge funds and distressed asset firms are scrambling to buy these bonds for pennies on the dollar right now. If they buy a bond for 10 cents and the US government brokers a deal that values it at 50 cents backed by oil revenue, that is a 400% return overnight. This is the distressed lottery ticket. But it's dangerous because there is a third player at the table, a player who just lost everything and isn't going to walk away quietly. We have talked about the US winners, but in every transaction there is a loser. For the last 10 years, China and Russia loaned Venezuela billions. They kept the Maduro regime afloat. In exchange, they got oil shipments. With Maduro gone, those debts are now in limbo. The US administration has hinted that odious debt taken on by a dictatorship against the interests of the people, might not be honored. This is the geopolitical foreclosure. The US is effectively erasing billions of dollars of Chinese and Russian influence in the Western Hemisphere with the stroke of a pen. Now, before you go and dump your life savings into Venezuelan bonds or oil service stocks, you need to understand the risk. The media is comparing this to Panama in 1989, but the market is worried this could be Iraq in 2003. If the transition isn't smooth, if the remnants of the regime fight back in the oil fields, that $300 billion asset stays in the ground. Pipeline sabotage, guerrilla warfare, these are real risks. That is why gold is spiking alongside oil. The smart money is betting on the long-term reconstruction, but they are hedging against short-term chaos. However, the base case remains. The United States cannot afford for this to fail. The energy security of the Western Hemisphere depends on Venezuela coming back online. The contracts will be signed, the oil will flow. The only question is, will you own the companies that are building the pipes, or will you just be watching it on the news? The capture of Maduro is just the headline, but the reconstruction is the trade. We are watching history unfold, but market history rewards those who act on data, not emotion. The window to position yourself for the Venezuela reset is opening right now. But listen to me closely. Once the major contracts are signed and the sanctions are officially lifted later this week, the easy money will have already been made. You need to be ahead of the ink drying on those deals. I want to know your take. Is this the beginning of a golden era for energy? Or is the market underestimating the risk of a long, drawn-out conflict? Drop your thoughts in the comments below. So, where should you be looking? Keep your eyes on the big three service giants, Schlumberger, Halliburton, and Baker Hughes. These are the only companies with the scale and the technology to handle a project of this magnitude. When the contracts for the reconstruction are finally announced, these are the names that will likely appear on the dotted line. Do your research on them now, because once the ink dries, the opportunity might be gone. And remember, in geopolitics, nothing happens by accident. Follow the money.